Welcome to Consider This with Big Joe Clark. Joe is a certified financial planner with more than 28 years of experience in the financial services industry. He serves as the managing partner of the Financial Enhancement Group, LLC, and also taught financial planning at Purdue University for 7 years. The Financial Enhancement Group is an SEC-registered investment advisory firm based in Indiana with more than $390 million in assets, serving clients in 31 states. Indiana offices are located in Anderson, Fishers, Lafayette, Rensselaer, as well as Sonoma County, California, and Bozeman, Montana. This show is for educational purposes, and you are strongly encouraged to consult your advisor regarding your individual issues and opportunities. Joe can be reached at 1-800-928-4001 at yourlifeafterwork.com. Enjoy the show, and remember to consider this.
Hello and welcome to Consider This. Joe Clark, Sherry Contos, and others. You are listening to the best of Consider This put together over the last few years of this show. You can find the information from the show on our website at yourlifeafterwork.com, iTunes, and various other places. Obviously, we're here weekly on WILO from 4 to 5 p.m. and Sunday mornings on Shine 99 between 10 and 11 a.m. Consider This really is a show that's much more than just the weekly headlines. We work together to try to give you insights and directions into things that you may want to consider about your financial lives. And the questions come in many directions. You can always reach us on Twitter, hashtag AskBigJoe. And of course, you can email us your questions. Consider this, that's all one word, consider this at yourlifeafterwork.com. We break the show down into what we call 5 critical financial elements. One, always begin with the end in mind. So we start with retirement income. Where is the money going to come from to maintain your standard of living? Number 2, then, is the tax plan that needs to be done each and every year before the end of the year. 3 is the investment policy statement. What's going to keep you from getting caught in a downturned market without paying attention, without having discipline to how you want to respond? 4th is life happens. It's the good and bad and ugly of life, the things that we just normally see that take place. Last but not least is the legacy plan. Everything that we do is all about your life after work. That's the name of our website, yourlifeafterwork.com. We want to take what's going on in the world, keep you abreast of changes that matter. Sure, it's always fun to talk about markets and headlines, but what we really want to do is give you things to consider. So as I said, shoot us an email, consider this at yourlifeafterwork.com. Enjoy the show and keep in touch.
Hi, I'm Ken Dilger, co-host of Consider This with Joe Clark. Joe is a certified financial planner and former professor at Purdue University. Joe is the managing partner for the Financial Enhancement Group, and Joe's passion is teaching people about their money so they don't make inefficient financial decisions. Find out more at yourlifeafterwork.com. The Financial Enhancement Group manages more than $390 million for families in 31 states. Join Joe and me as we address your questions about money and 5 critical elements of finance: retirement planning, tax planning, investment planning, life happens, the good, the bad, and the ugly of life, and legacy planning. Each week, we will tackle questions that can make a difference in your life. The Financial Enhancement Group can be reached at 1-800-928-4001. The Financial Enhancement Group is an SEC-registered investment advisor. Securities offered through World Equity Group, Inc., member FINRA SBIC. You can find out more at our website, yourlifeafterwork.com.
You are listening to the best of Consider This put together over the last few years of this show. Well, good morning and welcome to Consider This. I'm Joe Clark.
I'm Sherry Contos.
Very, very happy to have you along.
We are.
It's always a fun time to be on the radio show. Sherry, I got caught in the middle of a conversation the other day where somebody essentially asked me what they should be expecting from their advisor in terms of communication. And it brought up a series of issues and things. If you've not heard me talk on this show before about business models, then part of this may be a little bit different. But just the basics, if you will. When people are interviewing financial advisors, there is a checklist of things that I provide people to say these are the questions that you ought to be asking, and many of them are overlooked. Sherry, you've heard me say before that it takes 4 things for a family to say, Joe, we want to work with you in the Financial Enhancement Group. And the first one is, do we like and trust you?
Right.
And honestly, because of Madoff and Shrinker and other jerks in the world, the other three don't matter as much anymore. We tend to affiliate and work with people that we like and trust. And I think you should.
Sure, yeah.
But I do think there's three more steps to that relationship. The second one is, do you think we know what we're talking about?
That's pretty important.
It does matter. Having a securities license by itself does not qualify. So my daughter's at Anderson University. She's in her life group, and she calls me in a tizzy. Kendra is black and white. There's not a lot of gray in her life, and she knows the things that we do and that I have done in my career to be able to be where I am. So this young man is going to work for an insurance company. I think it's Northwestern Mutual, and he has to have a series of names of people to show that he's got enough people that he can call on to get this internship or to do his program. And so I don't know how the conversation comes up, but he tells his life group that there's no difference between a financial representative and a financial advisor. And Kendra goes bonkers, calls me and says, "Daddy, tell me that I'm not nuts." And I had to tell her she was wrong.
Okay, say that again. Financial advisor and financial
there is no, and it's sad, but it's true. Legally, you can call yourself a financial advisor, Sherry Contos.
Really?
Legally, anybody can call themselves.
I could put a shingle up and says that.
There is no legal restriction on being able to be called a wealth manager, a financial planner, a financial advisor, a financial representative. They are merely titles that are self-appointed.
I see.
Now, he can't say that he is a certified financial planner any more than somebody can say that they're a CPA for certified public accountant without being board certified. But having a securities license does not make someone know what you need them to know about your financial life. So one, do you like and trust them? Two, do you think they know what they're talking about, and how do they prove that? Right? That's why I think every one of my planners is enrolled in the CFP program to become certified financial planners. Every one of them are on our planning team. We think that educational part is important. The third is, do you understand our process? And then the fourth is, do you need our process? I think we take care of people who don't want to worry about their money. There are some people who want to worry about it, who want to be daily involved and adamant about it. We're not probably right for you. This is a full-service financial planning firm where we get paid as registered investment advisors to manage money for people, to make sure that they don't have to worry about their retirement, that they don't have to worry about things. And so the thing that gets left out of most conversations, in my opinion, is the business model. So you found Joe, you like Joe, you heard Joe on the radio. Joe's a nice guy. Joe's done it for 29 years, blah, blah, blah. That's wonderful. But what is Joe's business model? How do you know before you put your life savings with us at TD Ameritrade, where we hold our money? We don't have it at the Financial Enhancement Group. I tell TD Ameritrade what to do with it. But how do you know that I'm going to be here tomorrow? And does that matter? And the answer is yes, it matters a lot. The reason it doesn't say Joe Clark and Company on the door is because I wanted this to live a lot longer than me. There's 21 people on our team. There's more than 600 families that we take care of. We're continuing to grow, hence having to build the new building, because we don't have the space here to be able to handle it. But you need to know what that business model is to know that we're going to be here next year to be able to do the things that we promise. Not just the things we intend, but the things that we promise. Right. The world is scattered with good intentions, as my grandfather would say.
So my question is, you say it's important, number one, to know and trust the person, and then the other things. But so do you need to know who the team is too? Do they need to know who your team is too? Because you may not always be here.
We do our best to make sure that people know who the team is. So in every meeting we have, I always have a paraplanner in the meeting with me. And we've now started having another planner actually in the room with us. And it's for that very reason. And those that have listened to the show a long time know that I lost my mentor and dear friend December 11th last year. He did not have paraplanners like most of the industry. But people walk in and they go, we got a packed house here. And it's like, no, we got you, because you're the center stage. You matter. I have my paraplanner to be able to make sure that we don't lose any of the information about you and that everything is done. And if God calls me home early and or I'm hiking and I'm not here and you need help. I want people who know your situation, your information, and who are also qualified to be able to give you those decisions and information in my absence for one reason or another. Now, again, I'm 50. I'm going nowhere. But the communication part and that business model part matters.
You cover it, yeah.
So in the communication, what should you get? There is a massive move of money to the independent channels, as they call it. Those are registered investment advisors. So people are leaving the Wirehouse, the Merrills, the Morgan Stanleys en masse. And if you pay attention to the news, so are the brokers. Merrill, they're losing people because the money is going to the independent channel. One thing, always make sure that you get 2 statements from those people. So you get a statement from the Financial Enhancement Group. You get a statement from TD Ameritrade. They're never going to be identical because they're put out on different days, but they're close enough to know that nobody's running off with the money.
With the money, yeah.
When I see the 13 people who've stole money, from Madoff to Shrinker to the other people, in my 29 years, I've seen it happen 13 times. They all had one thing in common. They only sent people one statement. So you got something in the mail that you wanted to believe to be true.
Yeah.
And so you didn't ask any questions, and then bad things begin to transpire.
Yeah.
So on our statements, because I think it's so critical, it doesn't just show you the amount of money that you have. You know, saying that you have $1 million, but it's all in a 401k or an IRA that's tax deferred, is not the same thing as having $1 million that you've already paid taxes on.
Sure.
Or $1 million that's in a Roth IRA. So we show the tax diversification on the statements. Secondly, every week we put together the market carver. And there's a short one that's free for all you listeners. You can get emailed to you if you just go to our website at yourlifeafterwork.com. Get signed up for the market carver. It'll come to you every Thursday at 1 o'clock.
It's easy.
If you're somebody who just listens to the show, there's a much more in-depth, detailed one that goes to the families we serve at 11:04 every Thursday morning.
Wow.
And of the 600 plus families we have, about 85 people open it.
That's cool.
It amazes me the energy we put into it, and only 85 open it.
Oh.
But we take care of people who don't want to worry about their money.
I bet statistically that's high.
And coming here is not a job, right?
Right.
You're not putting your money here so that you have another job. And if you want to watch the market carver, outstanding. If you want to, when you come in for your FEG family update, when we run through the 5 critical elements, if that's all you want to make sure that your financial life is in order, then God bless. But key thing, guys, is it's not just the person in front of you. If you think I can do this on my own, you are mistaken. You need to understand the business model and the team that supports it. Ask how long they've been there, why they're there, why they love their job as well. Hey, you're listening to Consider This. I'm Joe Clark, along with Sherry Contos. We got to take a break, but we'll be right back. You got a question or comment? Shoot me an email. Consider this at yourlifeafterwork.com. Hi, I'm Joe Clark, host of Consider This and managing partner of the Financial Enhancement Group. Over the past 20 years, the Financial Enhancement Group has developed a process that's straightforward and simple. I'll share with you that process that we use to protect over 700 families and more than $300 million in retirement assets. We take care of people who don't want to worry about their money. I started in this industry 2 weeks before the crash in 1987. I've been an active participant helping families like yours strive to build a secure retirement. Here's what I've learned as a certified financial planner, a former professor at Purdue University, and a trusted advisor for the last 3 decades. Nothing will separate you from your retirement like the IRS. You can reach us at 800-928-4001 or consider this at yourlifeafterwork.com. The Financial Enhancement Group is an SEC-registered investment advisor. Securities offered through World Equity Group, Incorporated, member FINRA, SIPC. Again, that number is 800-928-4001, yourlifeafterwork.com. You are listening to the best of Consider This put together over the last few years of this show. Well, good morning and welcome back to Consider This. I'm Joe Clark.
And I'm Sherry Contos.
Happy to have you along.
Yep.
Hey, we started the show talking about things that you needed to worry about heading into October 15th, because that's when your final taxes are really due, the tax return itself. So even if you filed, you can go back and amend, but you can't do anything affecting 2018. All we're talking about is your 17 return.
Right.
That's why tax planning is so critical. And we're talking about a couple that took the time to learn, and then went back to the answer that they wanted to hear, at least one of them wanted to hear in the meantime, without going any further.
Yeah. So I wanted to get to something that we've talked about before, and that is the interrelationship between the people that are actually coming to you for help and their entire extended family. Because we've talked in other segments how different tax returns, even though you might be dealing with the parents or the grandparents, it can all be affected.
Absolutely. We look. I do my best when we send out our tax package. So November 1st, if the first week in November, if you're one of our families, you get a package in the mail, and that package essentially says, "Hey, have any of these 8 to 12 things occurred to you this year? And have they occurred to your adult age children?" That's people 25 and over, or people that are on their own, married. I've got a 21-year-old that's married, or your parents have still living, right? And those questions are: have there been any extreme charitable gifts? Did somebody get divorced or pass away? Did you have a large income change, either good or positive or negative? Those kind of things that we're looking for. And so we get very much into that family planning and stuff. In fact, we have a family bundle program. So just to make this as easy as I can in English, there are, you can look at Anderson where the Financial Enhancement Group is headquartered. And people will tell you that Anderson is not very affluent. And they are accurate about that. Affluence is a lot of income, excess income above what the median wage would be. Not just expendable, just income in general. That's affluent. So somebody makes $150,000 a year in central Indiana. They are affluent relative to other people.
Sure.
It doesn't mean they have $1 in the bank.
Right, that's true.
So people who are affluent are dealt with by insurance agents and people who sell stuff.
Yeah.
Right? Because they can pay a premium. They've got enough cash flow to come in to pay a premium, which means they're not fiduciaries. They're getting paid on commission, but in many cases, it's the only advice that a young doc or a young professional or a business owner can get. They've got income, but they don't have a lot of assets yet. Right. Or Joe, in a lot of my life, I had assets, but they were in a business. Right. I mean, I didn't make it. I wouldn't have been a very good client for me for 2 decades, right?
Sure. Yeah.
Right. So then you move to the other side, which is where wealth comes from. Now, wealth is, you don't have to have a lot of income. That's how we have a guy in our example with $2 million in an account.
Right? Yeah.
And in a 10% federal tax bracket. Right?
Yeah.
There's a difference between affluence, income recognition today, and wealth. And wealth is what people that are fiduciaries like myself get paid to manage, right? It's how the Financial Enhancement Group functions. So when you've got that concept of we don't sell anything, we don't make any commissions, the only way we get paid is to manage assets that you already have, right? Then younger people often get left out of the deal. And so at the Financial Enhancement Group, we created the FEG allocation model, the allocation process for younger people to come in. So you're part of we take care of grandparents, or we take care of Sherry. We family bundle. So your kids don't necessarily have to have an account at the Financial Enhancement Group, but they have the ability to call in and say, should I buy or lease? Should I buy a disability policy? How much life insurance do I really need?
Just because the parents are part of the process?
Just because the parents are part of the process. And we do that because what ends up happening when Sherry's gone, I'm taking care of your kids and the twins. Right? And I would much rather get them off to the right footing than get them in the right area, and then them buy a policy that I've got to unwind 20 years later because somebody thought the idea of buying whole life insurance was good for idea. College planning. It sounded good on paper, until you put all of that stuff together. So understanding that family bundling is important. So the CPA probably knows, in the example that we were giving, that his kids are doing pretty well.
Yes.
Right? Probably doesn't know their names. I know he doesn't do their taxes, right? Because I know where they live. Right. Because we ask these questions to be able to come up with a strategy.
Right. Yeah, it makes sense.
I can look at you and say, okay, here, Sherry, here's what I believe to be true.
Right.
But as a doc, I'm still going to give you an MRI and run some blood tests.
I'm
not going to tell you that it's, there's nothing wrong without making sure, and you can't just answer questions based on a singular tax return or a singular investment. And it doesn't work that way. You get into trouble.
Do you think most CPAs do tax planning, or do they just do tax reporting?
Most just do the reporting. Not always their fault.
No.
Not always their fault. Their model is to bill by the hour.
Right.
Right?
Oh, yeah.
Nobody wants to pay. That's one.
Yeah,
right?
yeah, that's
Nobody
right.
wants to pay. Number two, nobody wants to take the time.
Right.
And number three, at Thanksgiving, the last thing you're thinking about is filing your taxes for the year. Right. And so you're not
Yeah.
calling the CPA firm saying, hey, I need to schedule an appointment so I can talk to you about any year-end planning that needs to be done.
Yeah.
On the suitability side of the financial world. So think every broker that you know, every wirehouse you've worked with, at the bottom of everything, there's a little tagline that says, consult your tax advisor.
Yeah.
Well, I've been partners with accounting firms since 2001. I'm here to tell you, it doesn't happen,
It doesn't happen.
90% of the time. And it's not that the CPAs couldn't do it.
Right.
It's that their model is not set up in that way for most of them. Now, that doesn't mean that there's not some that are out there that are quite competent and very good.
But how would they do it if they didn't have access to all the information like that you do?
Well, you have to ask those questions.
Okay.
It's not like somebody showed up and said, here's the family diary.
Yeah, yeah.
Right? I mean,
Yeah, you asked for it, yeah,
You have
yeah.
to have a process that says, here's what I need. This is why it's important. And here's how you go through.
So financial planning in general, it makes sense to me that tax planning would be part of financial planning.
It absolutely is.
It makes sense that those two are actually really the same thing.
It absolutely is. And it's hilarious because I do the tax planning with the CPAs.
Yeah.
In fact, if you ask my CPA partners, they'll tell you that I do most of their tax planning because my head is wired that way.
Oh, sure. Yeah,
They
yeah,
do
yeah.
all my tax reporting because I have no clue how it
Yeah,
gets
you
in the
don't
slots.
want to fill out the forms.
Well, I don't understand. I don't get it.
Yeah,
the K
right, yeah.
this, I understand the planning part.
Right,
Right.
yep.
Whether it's a 199A new, that's all their baby.
Right, sure.
But that's why you have to work with the competent ones,
Right.
in order to be able to get it done. And just part of our process, if you're one of our families, it's a whole lot easier to come to see me when you know I'm doing it for free. Right?
Yeah.
Because it's already bundled in.
It's already part
we
of
get
it.
paid to
Yeah,
manage
yeah, yeah,
money.
yeah. Oh, I see what you're
We do the
saying.
planning for free. So it's a whole lot less painful
Yeah.
to send an email to ask a question.
Sure.
Right?
Sure.
And that's why we
Yeah.
have the team of people that we have.
Interesting.
The things that we do for the average family that walks in here, I could not afford to do for myself if I didn't have the team behind it.
Behind it,
Because
yeah,
of
yeah,
all
yeah,
of the
yeah.
processes, the specialties, and everything else that goes along. I don't honestly understand how people do this in one-man shows.
Yeah, because the best way for you to manage money is to actually have the full picture.
You have to. If
You
you're
have to.
if you're going to do it right,
Yeah.
you have to, because any one of those 5 critical elements can and will
Yeah,
sink
makes
you.
sense.
The retirement part, the tax part, the investment part, the legacy part, etc. Hey, if you got more and you want to hear more, don't forget to go to our website, yourlifeafterwork.com. While you're there, get signed up for the Market Carver. Sherry and I'll take a break. We'll be right back.
Hi, I'm Ken Dilger, co-host of Consider This with Joe Clark. Joe is a certified financial planner and former professor at Purdue University. Joe is the managing partner for the Financial Enhancement Group, and Joe's passion is teaching people about their money so they don't make inefficient financial decisions. Find out more at yourlifeafterwork.com. Financial Enhancement Group manages more than $390 million for families in 31 states. Join Joe and me as we address your questions about money and 5 critical elements of finance: retirement planning, tax planning, investment planning, life happens, the good, the bad, and the ugly of life, and legacy planning. Each week, we will tackle questions that can make a difference in your life. Financial Enhancement Group can be reached at 1-800-928-4001. Financial Enhancement Group is an SEC registered investment advisor. Securities offered through World Equity Group, Inc., member FINRA SBIC. You can find out more at our website, yourlifeafterwork.com.
You are listening to the best of Consider This, put together over the last few years of this show. Well, good morning and welcome to Consider This. I'm Joe Clark.
I'm Sherry Contos.
I'm so happy to have you along. Hey, you know what is amazing is when one person on one mic can pop both of them
No
to
way.
a new. Oh, you did. You took them to new levels. Anyhow, hey, glad to have you all along. It is an exciting show. We are having all sorts of fun this morning and ready to go. And just to get you all fired up, because I know, Sherry, I know you don't like change. This isn't
don't.
change.
What?
This isn't change. This is just preparation.
Preparation
right?
for change.
So the idea of the show is to give you things that you should be or need to be considering in life.
Yes.
So let me ask you this question,
All
because
right.
you're an experienced individual. Notice I didn't say senior,
Yes,
old, or
please.
anything
Yes,
else.
thank you so
You're an
much.
experienced individual.
Yes.
When are taxes due?
Depends if you're doing estimated or.
No, that's payments. When do people think
April
that their tax
15th.
returns due? And that's when you actually have to pay your taxes.
Yes.
When do you actually have to have your taxes completed?
April 15th.
October 15th, right, Sherry?
Oh.
October 15th of the year after the year.
Oh, that's true. That's
so
true.
we're in 2018. Your 2017 1040, your federal tax return, the amount that you owed was due April 15th.
Oh, yeah.
But the filing is actually due October 15th. Now, what that means for you
yes.
is that there are things that you can go back and augment and change. And we've been talking about this all year long. We have a known difference between 2017. This happens very rarely.
Yeah.
We have a known difference between 2017
Yes.
and 2018.
Okay.
And it leads for some opportunities for arbitrage.
What is arbitrage?
Arbitrage is when you have a known ability to profit off of a given situation.
A known ability to profit off of. Okay.
And that's Joe's definition. So don't look it
Yeah,
up in
yeah.
Webster's or Black's Laws, but that's what it means.
Okay.
Arbitrage is when I can take advantage of information that I have and an opportunity that I have. So let's pretend last year you were in the 15% tax bracket
Okay.
and you did a Roth conversion.
Okay.
Now, a Roth conversion, as you recall, is taking money out of an IRA and converting it to a Roth.
Right.
So you knowingly paid taxes on it last year on your 2017 return, where if you and your family married filing jointly made roughly $100,000, you were gonna wind up probably in the 15% tax bracket. Okay. Now, what do we know about this year? Same couple, same scenario, is now only in a 12% tax bracket.
Okay.
Right? Because of some of the changes that came out. So if your Roth IRA happened to have performed very, very well over the last, year since you did it, then you're probably going to want to leave it alone.
Right.
But let's say that it's been flat. It's gone nowhere. We've actually seen people who come in somehow or another who have negative returns since they've done the Roth conversion. So doing the Roth conversion last year means you're going to pay the taxes at a higher rate, and on money that may be flat or have gone down. This is the last year, Sherry. 2018 is the last year you can do a Roth recharacterization for conversions you did in 2017.
Okay.
So if you did a Roth conversion in 17, not a Roth contribution, but if you did a conversion, you really need to get out the stuff and look at the numbers and give us a call, 800-928-4001, and say, hey, here's the numbers. What should I do? Right?
Yeah. So you're saying if you, in the case that you lost money for whatever reason,
Not even lost or it didn't go up.
then it wouldn't have benefited you that much to have made the conversion.
No,
So
but a
you
lot
could-
of people a lot of people never understood the recharacterization rule in the first place.
Right.
So they would make the decision to make a conversion,
Yeah.
fold their arms, end of discussion.
Right, exactly.
And what I'm telling you is, for some people that are out there, this is the last year you can do a Roth recharacterization on a conversion. You can still do them on a contribution, but last time you can do them on a conversion. And if you did a conversion last year, you really need to look at the numbers so that you can appropriately file your return. And every now and then somebody will say, well, Joe, I did my taxes April 15th. They're already in. I don't want to get around to it.
Right, yeah.
And then I do the math and go, you know what, Sherry? You're going to save yourself $2,500 by giving your CPA $150 to refile and make this one change.
Yeah.
I don't know about you, but there's not a lot of people in my life that make a couple grand in an hour, right? This is not,
No.
this is very, very simple,
Yeah.
and yet it can be confusing,
But
which is why you use professionals.
But it's not like the checks in the mail, right? It's like on paper, 2,500. Like an example you just gave.
Oh, no, the check can very well be in the mail. They send refund checks.
Ah.
I mean, you can
Yeah,
either
yeah,
apply
yeah.
it toward next year, or you can
Because
get...
you've already paid the taxes on
Or
it.
you can get a check in the mail.
I see.
Pick one.
Got
pick
it.
one. So there's things that we need to do by the end of October. Well, you have to have them completed by October 15th that are coming. That's one of them. The recharacterization on the conversions. If you over-contributed, every now and then we'll see somebody who didn't understand that they weren't allowed to put money into a Roth IRA because their adjusted gross income was too high. Again, you've got until October 15th to fix that. That's true of every year.
Wow.
Don't forget to withdraw your IRA contributions without penalty. The money that you had, we always want to pay attention When somebody comes into our office, we start by teaching them the fiduciary focus. So there's 4 things when I wake up in the morning that I'm concerned with as a fiduciary. And remember, as a fiduciary, it is my job to take care of your money as if it were my money and we were in the same situation. So I worry about risk and volatility. Yep. I worry about fees and expenses that you're paying. I worry about taxes today and tomorrow. And the 4th then is real return, or what we would call inflation. Invariably, somebody is sitting out there listening to this conversation right now that has got $1 million in an IRA and is effectively in a 0% to a 10% tax bracket without comprehending the deal. Yeah. I just had a couple who came in this week, and maybe this is you, right? And the couple heard me talk.
Yeah.
And they actually have $2 million inside of 403B plans, professors, 403B plans that they'd accumulated. They're living in a 10% tax bracket. Okay. They're paying taxes on Social Security. They're not 70 and a half yet. They don't have any required minimum distributions. They heard this show, then heard me talk, and then went to their CPA. And their CPA said, you do not need to do Roth conversions. They have 3 children, all have the initials MD behind their name. Oh, wow. 2 of them are surgeons that are very, 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 very wealthy. Wow. They're going to be 70 and a half, forced into required minimum distributions in 4 years. And the CPA is looking at the snapshot today without recognizing the fatal flaw that one of them will die. Yeah. And 2, eventually, both of them will die. And under the current tax code, money that they could be pulling out at 10% or 12% to pay the IRS and be done with the little burgers, they're going to pass on to their kids that are at the 37% tax bracket. And they're going to end up paying 3 times more money to the IRS. Why is the money in the 403B? Because they hated the IRS. Yes. They wanted to do tax deferral. So there is a reason why we work with the CPA firms that we do. Not everybody gets it. Yeah. Right? Yeah. You are on a financial journey, my friends. Please don't ever forget that. Do not let somebody let you think about one investment statement, one annual return, one tax return, one concept. You can't get in a world of isolation. You do not live in a silo. We have to make decisions based on all of the rules that we know, where we are in the financial world. Use that fiduciary focus, put it together, and make your life better. Please do not be like these people that are. I mean, I'm telling you, there's going to be over $500,000 of excess tax paid on $2 million with no growth just because they don't understand the rules. Sorry to get fired up. I know it's early in the morning, but it's part of the deal. Hey, you're listening to Consider This. I'm Joe Clark, along with Sherry Contos. You got a question or comment, shoot me an email. Happy to answer it, or you can give us a call at 800-928-4001. Sherry and I have a lot to talk about. We'll take a break and be right back.
Hi, I'm Joe Clark, host of Consider This and managing partner of the Financial Enhancement Group. For the last 20 years, the Financial Enhancement Group has developed a process that's straightforward and simple. I'll share that with you, what we use to protect more than 700 families, more than $300 million in retirement assets. We take care of people who don't want to worry about their money. I started in this industry before the crash in 1987, and I've been an active participant helping families like yours strive to build a secure retirement. Here's what I've learned as a certified financial planner, a former professor at Purdue University, and as a trusted advisor for the last 3 decades. Nothing will separate you from your retirement like the Internal Revenue Service. You can reach us at 800-928-4001 at yourlifeafterwork.com. The Financial Enhancement Group is an SEC-registered investment advisor. Securities offered through World Equity Group Incorporated, member FINRA and SIPC. Again, that number is 800-928-4001, and you can reach us at yourlifeafterwork.com. You are listening to the best of Consider This, put together over the last few years of this show.
Well, good morning and welcome back to Consider This. I'm Joe Clark.
I'm Sherry Contos.
You know, and sometimes the story just continues. It does. You know, I push pause, we get ready for the next segment, and Sherry starts asking questions. Yeah. You know, inquiring minds want to know.
Okay, so I'm thinking if I'm these people that the example you just gave, they come to see you. And
we'll call them Tom and Sherry.
Tom and Sherry have given their CPAs given them advice.
So hold on. So just in case you missed the last segment, and remember if you did, you can always go to our website at yourlifeafterwork.com so that you can go in and find the rest of them. But in the scenario that I gave,
We had a couple come in. They heard this radio show. They have $2 million sitting in 403Bs. They're professors. They came to hear me talk. I explained to them how their investments work with their taxes. We went through the fiduciary focus. The wife got it.
Yep.
Right? Husband hates the IRS, hence the money in the 403B. We all have a dislike for paying taxes. I've got that. But remember, in the fiduciary focus, there are 4 parts, my friends. Risk and volatility, fees and expenses, taxes. But it's taxes today and tomorrow. Right. You are on a financial journey. You did not save for 30 years to spend it all in a year. Right. It's not a one-hit wonder. Right. And the bad news is you only get one shot at it. So the husband took my information and went back to his CPA. We work with a lot of CPAs.
Right.
We've got a few that are part of the One Stop where we work very well together in a partnership relationship. But I've got CPAs that are outside of that. And we call and we pick up the phone. In this case, the CPA didn't pick up the phone and call me, merely told the husband that he didn't need to do this particular thing. And there we are. So
well,
go ahead.
My question was about your process, because life is relationships too. So I'm putting myself in these people's shoes, and I've got this relationship already with my CPA. His advice is different than when they come to see you, and they now know is wise advice in terms of finances. They're kind of in a corner.
No, they should know that it's wise advice. So what happens? I used to teach my students at Purdue. And you have to be very, very, very cautious with this, Sherry.
Okay.
I used to teach my students at Purdue, in order for them to build relationships, I taught financial planning. So ostensibly, they were going to do what I do, what I've done for 31 years. And when a new family comes to see somebody at the Financial Enhancement Group, in my mind, there ought to be 4 things that go through their mind.
Okay.
But because of Bernard Madoff, because of Mr. Shrinker, who jumped out of a perfectly good airplane, right?
Yeah.
And because there's so many changes and so much confusion in the normal whirlwind of life, most people just get stuck on number 1. And number 1 is, do you like them and trust them?
Right. Yep.
So I have people at my church I like and trust. Yep. I'm not going to let them operate on my elbow.
Right. Yeah.
I have people who I like and trust who say that they are plumbers.
Right, but you're not.
It doesn't mean that I'm letting them come into my brand new building
and put plumbing
and do the plumbing inside of it,
I
right?
Get it. Yep.
So there are people who say they do things, but you've got to ask the rest of the questions. So the 4 things that we focus on: number 1, do you like us and trust us? If you don't, then there's no way we can really ever move forward. And I've got that. We've got a lot of different personalities on our team for a reason.
Right. Yeah.
The second is, do you think we know what we're talking about? Right. And so between the CFP and the CFA and the CPAs that we work with and the EA, right, most people think we understand what we're talking about.
Yeah.
Right. We have a great team of 25. The third is, do you understand my process?
Right.
And here's where it gets to be very interesting.
Yeah.
The fourth one then is, do you need the process? So let's go back to number 3. The CPA that he went to, they happened to go to church together.
Sure.
I'm sure he's a great guy.
Yep.
He wouldn't call me, didn't want to talk to me.
Interesting.
Didn't want to have that conversation.
Yeah.
There's 2 people on his team, him and his assistant, right?
Oh, wow.
I have an army of 25 people with the director of financial planning, because I know, as much as I'm addicted to this industry, I know my why. Thank you, Simon Sinek. I wake up every morning, right, to educate people about their money, so they don't make inefficient financial decisions that lead to frustration and devastation, right?
Yeah.
I got it. So I know what drives me. And I know that Joe Clark alone cannot do that. It is impossible.
Yeah.
And so I took the Henry Ford model of life and did my best to hire as many people as I possibly could who were smarter than me.
In different
areas.
Yep.
Some, now I've got a director of financial planning that Aaron is encompassing that whole thing. But we've got a specialist in Social Security, because you have to have one.
Yeah.
Right. We've got people, a CFA obviously, who's on the investment playbook, is certainly, in charge of that part. So there's a group of people that come together, and in a single shop, if you come to me, and I've said this in the world about the medical world before, when was the last time you got a second opinion when you heard what you wanted to hear?
Yeah.
No, Sherry, you don't have cancer. Okay, back to the golf course, right? Back to watching, back to the cooking shows and back to having fun.
Right.
On the other hand, I say, Sherry, you've got cancer.
Then I'm going to get 2 or 3.
And worse than that, I'm going to give you 2 or 3 other people to call. Here's the people I'd get the second opinions from.
Yeah.
Right? Our minds are so messed up. So they hear the show, they understand that they have a problem. Nobody wants to have a problem.
No.
Nobody wants to say, hey, I've spent 30 years of my life. It's not hurting me today. So why make a change right now? Nobody wants to go through that.
Right.
And yet when you're confronted with evidence, you have to make a decision to know and to not to do.
Yeah.
You might as well have not known in the first place.
Right.
You know, I used to have a friend that said, don't confuse me with the facts.
Yeah.
Right?
Yeah.
Well, the facts are, when you look at his silo and isolated situation, when he called his CPA,
Yes.
his friend,
Right.
knowing that he hates taxes and nobody wants to deliver bad news.
Oh, he
Right?
told him what he wanted to
Oh,
hear.
he's known him for 25 years.
Sure.
Right?
Yeah,
So we already know
yeah.
Dad hates taxes.
Yeah.
Dad loves the $2 million in the 403B. So he calls the CPA, and there's already a bias that's built up. The CPA wants to give him what he wants to hear.
Right.
The CPA knows that he doesn't want to pay taxes today.
Right.
And so the CPA says, no, you don't need to do that.
Yeah.
Now the wife is in the background going, are you kidding? Did you not learn and listen?
Yeah.
Do you not understand that we have 3 kids that are all docs? Do you not understand how the taxes work now?
Yeah. Yeah.
But
Well, the CPA doesn't have the full picture like what you
he's
guys
not
are putting.
taking it into the full picture.
Yeah, okay.
And he's looking at a singular 1040.
Right.
And believe me, I could not function without my CPA partners.
Oh,
You
yeah.
know, so please do not take this as a lamb blasting.
And it's
on
not
him.
like you won't work with other
And it's
CPAs.
not and it's not me telling him he should take all $2 million in 1 year and convert it to a Roth IRA
Right.
to delay required minimum distributions to get taxed out at his
Yeah.
rates. It's to maximize these extraordinary brackets that we have today for the first 2 generations of taxpayers, making sure that we're not raising Medicare B Part B premiums, making sure that we're doing everything right along according to Hoyle in terms of what happens. And we work with the CPA and we work with the strategy on the investments to make sure that they all match.
Yeah.
Right?
Yeah.
So there are 5 critical elements. In our opinion, any of the individual 5 can wreck you.
Yeah,
Right?
yeah.
Your life after work is how you're going to manage that when you're done. Right? The second is the tax planning that has to be done every year. The third is the investment playbook. The fourth is what we talk about in your segment, Sherry, life happens.
Yep.
And then the fifth is a legacy plan, and there's no reason to put it all together and then lose it. And this guy has got a sophisticated trust. He understands the concept of legacy planning, but he's not understanding it in the concept of income tax. And that pain is going to destroy a quarter of their life savings for absolutely no reason. And no, they won't see it, but their kids will. And
Yeah,
the IRS
yeah.
will benefit from it. Hey, you're listening to Consider This. I'm Joe Clark along with Sherry Contos. You got a question or comment, shoot us an email, considerthis@yourlifeafterwork.com, or give us a call, 800-928-4001. We'll be right back.
Hi, I'm Ken Dilger, co-host of Consider This with Joe Clark. Joe is a certified financial planner and former professor at Purdue University. Joe is the managing partner for the Financial Enhancement Group, and Joe's passion is teaching people about their money so they don't make inefficient financial decisions. Find out more at yourlifeafterwork.com. Financial Enhancement Group manages more than $390 million for families in 31 states. Join Joe and me as we address your questions about money and 5 critical elements of finance: retirement planning, tax planning, investment planning, life happens, the good, the bad, and the ugly of life, and legacy planning. Each week, we will tackle questions that can make a difference in your life. The Financial Enhancement Group can be reached at 1-800-928-4001. Financial Enhancement Group is an SEC registered investment advisor. Securities offered through World Equity Group, Inc., member FINRA SBIC. You can find out more at our website, yourlifeafterwork.com.
You are listening to the best of Consider This, put together over the last few years of this show. You know, there are articles that are written when I do my research, either for the radio or for teaching the planning team. Sharing with them. We do a couple of unique things, I think, inside of our office. One is we actually, because we manage the money internally, we have an allocation meeting that we have every week. Where we bring in people so that they can listen to what's going on. If you're a family that we happen to serve, you're actually welcome to attend with a reservation the allocation meeting. In all the years I've done it, I've never had anybody come more than twice. Most people just don't want to know how the sausage is made.
So when you say allocation meeting, I'm not sure people know what that means.
Well, we have a little more than 600 families we take care of, and there is about 7 or 8 different investment models that we operate. So if you come in and you've got money that's after tax, that's in an account that's exposed to the IRS. We're not going to liquidate everything that's in that and just put you in front of an IRA. The IRS is in harm's way.
Oh,
We're just not going to do it.
yeah.
So your portfolio may look a little different from a tax perspective.
Right.
But in an IRA or a plan like that, the models all look the same. So if I'm imbalanced, you're imbalanced, we're going to own the same percentage of the value. The account size may be different.
Right.
But we're going to own the same thing.
Right.
Our job in that allocation meeting is to be able to sit down and to make sure that we have the right things in each of those models for what they're assigned to do for their.
So you're going to talk about
task.
specific companies,
individual companies and
stock,
individual
okay.
exchange traded funds, and the macro things that are going on.
Right. Yeah.
Adam is our fundamental. He's a CFA, the chief investment strategist, and his job is really the fundamental part of the overall market, as well as the sectors, and then the individual companies that we have. He looks at them on a fundamental basis.
Yeah.
Andrew is a chartered market technician. His job is to look at it from that, what's the stock doing price wise compared to it's the same sector, same peers. And I'm more of the macroeconomics. What is the big picture and demographics, in the world as we live in today, telling us that we need to be paying attention to?
See, I think I would like this allocation.
It's fun in our minds, but like I said, nobody's come more than twice. But the other thing we do is have a planning meeting, and the planning meeting is where we bring in the financial planners and 2 of our senior paraplanners. They come in and we talk about everybody we saw the last 2 weeks, because everybody's on salary. There's nobody gets paid to do anything.
That's
and
cool.
so it's Sherry would say, okay, we saw these people and talked about the Social Security, and everybody would make sure that we would have said it the same way or add any thoughts that need to be able to be in.
That's a good idea.
No different than the medical world that does it when a patient's died.
Yeah.
They have a debriefing over what could we have done better, differently. We do it up front to make sure that everybody stays on that same page. And if it's something that we've never come across, we build a 1-page a checklist that says these are the things that you need to ask to know, so that when we bring in a new planner or a paraplanner is doing it, we have the ability to be able to get that done. So anyhow, in this case, it's an oddity. The title of the article came from Money, and the title of the article was "Couples Get Separation Anxiety Over Financial Planners," and it was re-aired in Reuters. And he said that the 13%, according to the study, this is actually done by Fidelity, 13% of couples keep their own respective financial advisors, according to a 2015 couples retirement study from Fidelity. And I first thought, I said, there's no way. Well, we're kind of weird at the Financial Enhancement Group. 600 families, and I think there have been 28 divorces in the whole thing. They're long-term marriages. Almost everybody is married or widowed or widower, and just the way it is. But we do have people who have come to us after a second marriage.
Yep.
Who have me as a planner on one side, and they do their own 401k. They may not have a planner. They may think they can do it on their own.
Yeah.
And there's one family I mentioned that I actually take care of both of them, but separately.
That's so funny.
And so in their research, they said 28% of couples reported keeping their financial accounts mostly or completely separate from their spouse or significant other. That was up from 20% who did that just 2 years earlier. Most of it is the Gen Xers that, according to the study, that probably shouldn't be surprising. They said that was because people were getting married later,
right?
Often had careers, already established a relationship,
right?
The average woman now, which has increased, because we used to get married at 25 and a half. Average woman's getting married at 27. Average man's at 29. Both historic highs. The problem here, guys, is it's very easy to have conflicting strategies, overlapping holdings, and duplication of fees. And we all know that I hate excess fees and expenses.
Yeah.
The duplication of strategies is one thing. Overlapping are things that are contrary, bug the garbage out of me. But the real thing is, if you are married and you're filing a 1040 jointly, and again, this article did not take into any consideration what's going on that tax return. whether you're doing Roth conversions or not. If Barb and I kept our money separate and I did something that impacted her tax return, she's going to have to pay the piper, even though there was no way to have that discussion.
Right.
And I think, the article goes through this thing of life saying, hey, we need to continue to, we need to communicate. We need to talk about the investment. I'm going to give you some of the things they said, which some of them, it's obviously he's never dealt with people. But it's still, the 1040 has to be the thing that is there. So his first suggestion is get the planners in a room quarterly or at least annually. So you'd have me and the hubby and you and the wife, and we'll just have a sit down. Brilliant. Yeah. Talk about more fees and expenses in an agitated situation.
Right.
This is, if you've ever done anything in mediation or anything else, because either one of the planners, if they were doing their job, as I do with the ones that I take care of individually, I have told them on multiple cases they would not hurt my feelings. It would be better for you to have one person working together than for what you're doing. And they say, well, I'm not leaving you and my husband won't do the other. Or, my wife won't do the, and it's, it is what it is, but, you just can't. Secondly, don't feel pressured into snap decisions. You should never feel that. Unpack your attachment. Ask why this planner is better than that planner or this company is better than that company. That one's a good one. Use the moment to uncover savings. Now, this one is good. In this suggestion, they said maybe one partner has very favorable fees with a particular bank or brokerage firm, while the other has a terrific deal with an insurer. And that happens especially in company benefits. I see that a lot where one 401k plan trumps another 401k plan, or where the matching is different. We really want to be able to bring those all in together. And the example that they used in here, they had 14 different financial accounts scattered among various institutions. 14. How do you keep track of that?
Wow.
You can't give any of them the time that you need. People do that out of thinking they're having diversification, and that's just not, it doesn't work well. But, we want to pay attention to old annuity contracts, things that are out there that give you better strength and opportunities. And it's, you need to know, even if it's a second marriage, even if you were late getting married, let's look at what all of the advantages are. Even if you're going to keep a checking account separate, let's at least know what's going on, because it all winds up on your 1040. And my friends, it's all important. When markets go up and down, savings accounts go up and down. When you send a check to the IRS, it never comes back. It just doesn't. And if we can keep that 1040 in front of us at all times, make the best decisions there, we'll have a better chance of helping you get to retirement and enjoying the life that you've so desired. Hey, you're listening to Consider This. I'm Joe Clark, along with Sherry Contos. You got a question or comment? Shoot me an email. Consider this at yourlifeafterwork.com. Got to take a break. We'll be right back.
Hi, I'm Joe Clark, host of Consider This and managing partner of the Financial Enhancement Group. Over the past 20 years, the Financial Enhancement Group has developed a process that's straightforward and simple. I'll share with you that process that we use to protect over 700 families and more than $300 million in retirement assets. We take care of people who don't want to worry about their money. I started in this industry 2 weeks before the crash in 1987. I've been an active participant helping families like yours strive to build a secure retirement. Here's what I've learned as a certified financial planner, a former professor at Purdue University, and a trusted advisor for the last 3 decades. Nothing will separate you from your retirement like the IRS. You can reach us at 800-928-4001, or consider this at yourlifeafterwork.com. The Financial Enhancement Group is an SEC-registered investment advisor. Securities offered through World Equity Group, Incorporated, member FINRA, SIPC. Again, that number is 800-928-4001, yourlifeafterwork.com.
You are listening to the best of Consider This, put together over the last few years of this show. Well, good morning and welcome back to Consider This. I'm Joe Clark.
I'm Sherry Contos.
Happy to have you all along with us. And thanks for the questions and comments we get. Really appreciate them. It's nice when somebody shows up in the office that has been listening to the show for a few years.
Yeah.
You don't have to wait a few years if you're listening and you like what you hear and you think we might be a good fit. Feel free to give us a call, 800-928-4001. We are happy to talk to you. In the meantime, we're talking about required minimum distributions and helping people understand what's going on in retirement. There is a rules change, and I know, Sherry, that just...
It bugs me like nothing else, because how does the normal person know?
They don't.
I know. That's what I'm saying.
The good news is in the United States, we don't let you do anything that can kill you quickly.
Yeah.
You cannot walk into a drugstore and walk out with morphine without a prescription.
True.
Like I couldn't even go buy cough syrup. Because,
I know. It's locked up.
You got people of a bunch of different ages that are You need weak stuff. You need strong stuff. You need weak stuff. Oh no! You may be making meth or something. Whatever.
Yeah, it could be making
if
meth.
I knew how to make meth, I'd be rich, and we wouldn't. No, just kidding, Paxi.
Yes.
Y'all understand the point. So we'll let you do anything that kills you slowly. You can buy cigarettes.
Yeah.
Right. And you can manage your own money.
Yeah.
But you can't do anything quickly, right? Then we're going to put somebody in the way. I will tell you that this is a very, very, very complex thing. And there is the curse of knowledge is that you just don't know what you don't know. Mm-hmm. And people often harm themselves because they're not familiar with the complexities. Or, as my friend Barry Ritholtz would tell us, we have the illusion that somebody else is looking out for us. And we're going to talk a little bit about that in
I think that's
some of the things
prevalent.
that are going on. They've got the example that we use or that he used is, well, you got Mark Sanchez lost $100,000. Famous NFL quarterback, Hall of Fame guy. Not maybe a Hall of Fame, but really good guy. But somebody that profess to have the same faith, same Christian faith. How could this guy hurt me or intentionally harm me? Well, we never know in the end of the day whether it was intentional or not. In this case, Mark was very much taken advantage of and lost a lot of money, but people think, well, they have the same affiliation, whether it's military or whether it's a church or a Christian group. You've got to be careful with that. But the other part is we trust the people that we deal with. And I've had people look at me and say, Joe, well, I asked my guy about what you said, and he said it didn't matter. And it's kind of like, well, why can't I ask your guy? Because I'm guessing the questions that I would ask might be a little more pointed than the ones that you might ask, because you don't necessarily know the basis. We believe when we have somebody who's there to take care of us that all things remain equal. And folks, that is just not the case. Across the board. There are very, very important questions or observations that ought to occur. But especially when we're doing this stuff on our own, we have to be very careful. There's none of you listening to the show that would intentionally harm you or your spouse. I don't believe it. I don't believe we wake up and go, what can I do to hurt myself today?
Yeah.
Right?
Yeah.
But there's things that you don't know that are out there, and many of them revolve around that tax return. You are listening to the best of Consider This, put together over the last few years of this show. If you're new to Consider This, I really don't talk about the headlines a lot. You have not heard me talk about the Brexit, the vote that's going to go on in London and what that means for the economy. I really don't even get into the economic stuff that is happening. And that's
or politics. We don't talk about that either.
That's not because they don't matter. Every week I send out something on a video newsletter we call the Market Carver. It's free to anybody who wants it. After we do our allocation meeting on Monday, there's 18 of us that are on our team, and 3 of us are directly responsible for the portfolios. So we manage a little more than $200 million, and we come together every week. We're obviously working on it all day long, every day, but we come together every Monday and discuss everything that's going on in a collective setting, distribute that information to the team, make the changes that need to be made when they need to be made. And then Adam Harder, our Chief Investment Officer and Chief Investment Strategist, I should say, in a CFA, one of the two of us do a video called the Market Carver. It comes out. It's free for you to be able to get. That's where we talk about the NIBOR and unemployment rates and the Brexit and all of that. Folks, I appreciate the comments and the questions and for your time for tuning in. God bless. Have a great week. We will see you again soon.
Thanks for listening to Consider This with Big Joe Clark. Joe can be reached at 1-800-928-4001 or via email at bigjoe@yourlifeafterwork.com. The Financial Enhancement Group, LLC, is based at 2704 Enterprise Drive, Anderson, Indiana, 46013. Be sure to check out their website for more information at yourlifeafterwork.com.